All right, welcome to the deep dive. Today, we're tackling something pretty fascinating, actually. It's this challenge that's kind of always stumped traditional Wall Street. How on earth do you value something like a digital currency?
Right. I mean, analysts are used to cash flow,
Hmm.
earnings, stuff you can plug into a spreadsheet.
Exactly. But crypto, it's just different. So today, we're zeroing in on one specific coin, XRP, and a really bold call from a Wall Street veteran who's definitely not sticking to the old playbook.
Yeah, so our mission here is really two things. First, let's figure out why those old methods just don't work for crypto. It's fundamental.
Hmm.
And then we're going to carefully unpack what this particular expert, Geoff Kendrick, is actually looking at. What factors is he using to make this big forecast for XRP?
And that's the goal for you listening in. We want to cut through all the noise, help you grab the core insights, maybe some surprising facts, and figure out what it all might mean for how you see the crypto space evolving. Okay, so let's get right into it. Why is it so tough for Wall Street types to put a price on crypto compared to, say, Apple stock?
Well, it really boils down to the fundamentals, like I said. A stock represents ownership in a company, right? That company makes money, hopefully. It has earnings, cash flow. Sometimes it even pays dividends or buys back stock. Cryptocurrencies, they just don't operate that way.
No quarterly earnings calls for Bitcoin, huh?
Exactly. No profits, no losses in the traditional sense. So those standard valuation models, your discounted cash flows, your PE ratios, they just don't apply. They're kind of meaningless here.
So does that mean it's all just guesswork then? Or are analysts like Kendrick finding new ways to measure value? Because if the old tools don't work.
That's the key point. It's not just guesswork, or it shouldn't be. The shift is towards looking at different factors entirely. Things like utility, network adoption, regulatory developments. It's a whole different framework. And that's what makes Kendrick's approach interesting. He's trying to build that framework.
Right. Moving beyond just the lack of traditional metrics to what does drive value in this space.
Okay.
And that brings us neatly to this analyst, Geoff Kendrick. He's the global head of digital asset research at Standard Chartered, a major British bank. And importantly, he's not new to this. He's a Wall Street veteran, spent 20 years covering global currencies before pivoting to crypto, so he has that traditional grounding.
Yeah, and that's quite significant. He understands the legacy financial system. And it's interesting, he's generally been pretty bullish on the big names, like Bitcoin, which kind of sets the context for why he's now making such a specific, strong call on XRP. He sees potential across the board.
Okay, so he's bullish, he's experienced. Let's talk about XRP itself. What is it, for anyone needing a quick refresher? It's one of the OGs, right? Created way back in 2012.
That's right. It's been around a long time in crypto years.
Hmm.
And its core idea, its big promise from the start, has always been about cross-border payments, making them faster and cheaper. Technically, it was quite advanced early on. The XRP ledger was one of the first networks that could handle, a high volume of transactions per second. That was a big deal then.
A big deal then. But what about now? Have others caught up?
Oh, absolutely. The landscape is much more competitive now. Lots of networks offer high speeds, but XRP still has that focus on payments.
Gotcha. And just for context, the source mentioned some numbers. Current price around 2.233 cents, market cap $131 billion. The days range pretty tight, $2.20 to $2.23. But look at the 52-week range, 40 cents up to $3.38. Wow, that shows the volatility, doesn't it?
It really does. Huge swings.
But okay, beyond the price chart, here's where, as the source says, it gets really interesting.
Yeah.
The first big factor in Kendrick's positive outlook, regulation, specifically that huge SEC lawsuit.
Ah, yes, the lawsuit. That was massive. Back in 2020, the SEC sued Ripple, the company, Brad Garlinghouse, the CEO, and a co-founder. The claim was that selling XRP back in 2013 constituted an unregistered securities offering.
And that dragged on for...
How long? 4 years. It cast this massive shadow over XRP, lots of unwanted attention, as the source puts it, definitely created negative sentiment. And everyone in crypto watched it closely because, the outcome could set a huge precedent for how the SEC viewed other tokens, too. Ripple had some wins along the way, but the SEC kept appealing parts of it.
4 years of legal limbo. That's going to hurt adoption and partnerships, right?
For sure. But then things shifted. Our source points to the change in administration after the election last November. The new leadership at the SEC, seen as more pro-crypto, started to, resolve some of these big cases.
So they settled or dropped several high-profile suits, including Ripple's?
Exactly. The case against Ripple was effectively concluded, and the impact was immediate. XRP's price jumped, naturally. But the bigger deal, the real insight here, is what it unlocked. It removed that huge regulatory overhang. It essentially gave XRP a kind of legitimacy boost.
Okay, so it wasn't just the price pop. It cleared the path for other things.
Precisely. Things like spot XRP ETFs in the U.S. suddenly became a real possibility. Before the settlement, that was pretty much off the table. It allows institutions to look at it differently now.
Right, that makes sense. So with that regulatory hurdle gone, what else does Kendrick see driving XRP forward? What are the other catalysts?
Well, he believes now XRP's sort of inherent strengths, its technical side, and its use cases can actually gain traction. He points again to its ability for those fast, cheap international transfers. He says it gives XRP a similar proposition to stablecoins, actually.
Interesting comparison. Stablecoins are all about, well, stability and payments.
Right. And Ripple has even launched its own stablecoin now, building on that idea. Plus, adoption seems to be growing. Kendrick notes a 50% jump in annual transaction volume on the network. And critically, Ripple has been forging partnerships with big traditional financial players. That gives XRP potentially a leg up when it comes to real-world adoption compared to some newer networks.
Okay, partnerships are key, but you mentioned competition earlier. Is that partnership strategy enough to keep XRP relevant? And then there's this other thing Kendrick mentions, asset tokenization. What's that about?
Yeah, tokenization. It's basically using a blockchain, like the XRP ledger, to represent ownership of, well, almost anything. Physical assets like real estate or other digital assets.
So instead of a paper deed, you have a digital token representing ownership.
Kinda, yeah. And it's seen as particularly useful for things like tokenizing ownership of U.S. Treasury bills or even representing stablecoins themselves on the ledger. It broadens XRP's utility beyond just sending money. It becomes infrastructure for a wider range of digital assets.
Okay, I see. So more potential uses. And how does this connect to the next big catalyst Kendrick sees, the ETFs?
Right. So tokenization increases potential demand for the network. And then you have the ETS potential. While there are already spot XRP ETFs trading outside the U.S., the big prize is U.S. approval. The SEC is still expected, according to Kendrick, to approve spot XRP ETFs maybe by the end of this year.
And what would that mean, realistically?
Kendrick estimates U.S. ETFs could bring in another, say, $4 billion to $8 billion in inflows. Just massive potential demand. And maybe more importantly, it further legitimizes XRP for both big institutional investors and regular retail folks. It makes it easier and more acceptable for them to invest.
Okay, so we've got the lawsuit resolved, technical strength, adoption growth, partnerships, tokenization potential, and the prospect of U.S. ETFs. That's quite a list of potential positives.
It is. It's a confluence of factors he's pointing to.
So the big question then, what's the bottom line? What price is Geoff Kendrick actually predicting for XRP based on all this?
Okay, so his prediction is pretty bold. He sees these factors driving XRP up to $5.50 this year. That's 2025, and then pushing further to $12.50 by the year 2028.
$12.50, wow. Compared to the current $2.23, what kind of upside is that?
Yeah, the $12.50 target would be about a 470% increase from where it is now. Even hitting the $5.50 target this year requires roughly a doubling from current levels. So, yeah, significant moves predicted.
Okay. Definitely bold. Now, inevitably, we need the reality check. The grain of salt, as you always say. What do we need to keep in mind here?
Absolutely essential. Look, investors should always take crypto price targets, especially very bullish ones, with a hefty grain of salt. We've said it before, these assets are way more volatile than stocks, and they're just fundamentally harder to value, as we discussed at the start. There's more uncertainty.
All right, even with all those positive catalysts.
Exactly. Yes, Ripple is now free from the SEC shadow and can focus on building its business, which is a positive. That could definitely boost adoption. But on the flip side, the competition is fiercer than it was in XRP's early days. Many other projects are vying for similar use cases. That's a real counterpoint.
So progress possible, but headwinds exist too. What's the source author's take, by the way?
The author finds XRP and its potential uses, especially around payments and tokenization, quite intriguing. They wouldn't be shocked to see it take off, particularly if macro conditions are favorable, like falling interest rates or a weaker dollar. However, they also stress the volatility. They personally find it too volatile to take a large position in, and still recommend that investors treat crypto, including XRP, as more speculative. Keep those positions smaller for now.
Sound advice. Okay, so as we wrap up this deep dive, it's been quite a journey through XRP's story, from battling the SEC to its technical roots, the potential in tokenization, and landing on this really eye-opening price prediction from Kendrick, balanced, of course, by those crucial warnings about risk and volatility.
Yeah, it really showcases how one analyst sees a combination of regulatory clarity, technical capability, and new market mechanisms like ETFs potentially driving huge growth. But it also absolutely highlights that this is still the crypto market inherently risky, volatile, and difficult to predict with certainty. Caution is definitely still the word.
So here's a final thought for you to chew on as you process all this. We've seen how regulatory shifts and new applications like tokenization are potentially legitimizing an established coin like XRP in the eyes of traditional finance. Thinking about that, what other established digital assets out there might be waiting for a similar moment, a similar convergence of factors that could bring them more into the mainstream? And what could that mean for their future and maybe for your own thinking? Something to consider.